Really crazy day today so far. Interesting gap up and sell off. We don't see that much. Usually see a gap continuations. So I like these. I like these kind of markets where the market gaps up and then sells off. Almost 45-point move here. So incredible opportunity if you were trading that gap on that gap. Um, but we're taking a look today at tick count trend, and so I'm going to show you a way to short rallies, how to short the rallies or buy the dips, and it's the tick count trend indicator. So basically what you have in the tick count trend indicator is the first indicator here at the bottom. It keeps track of the ticks from the beginning of the day, and so if red leads the way, it's bearish or down, the trend is down. If it's blue that leads the way, it's bullish and up, and if white leads the way, then it's neutral. So you see yesterday red led the way, and so the trend was down, obviously. Gap down, continuation. And down here at the bottom you see the dynamic tick count trend indicator. This is the static. It keeps track from the beginning of the day. This keeps track of the ticks of the last 30 bars. And one of the ways you can short this market, this is you see the results of the trading system up here too. And so the trading system for the E-mini S&P shorted this market. And so you can do that as well with the trading system or on a discretionary basis. I don't have a system yet for this with the dynamic tick count trend indicator, but on a very strong trendy day where the market's bouncing up and down, and you know the market's going down, but there's lots of counter trend bounces. How do you short those? Those are sometimes difficult to know when to short it, because if you wait too long, or if you get in on too tight of a rally, then you get stopped out, and then the market rolls over anyways. But the highest this number can be at the bottom is 30, because we're looking at the last 30 bars. And so you see right here is the dynamic tick count trend indicator, so it oscillates more between bullish and bearish. And so when the static indicator is red or bearish and down, then the dynamic indicator can pop up here in the blue range, and so it's a short-term rally. You get this short-term rally in the ticks, and when it gets up here in this 14 and 15 point range, it's halfway there. Right there it's at 17, and so you see the market rallying, and your indicator, your dynamic indicator, is telling you that there's been a short-term rally in the ticks and even in the market. And so that could have been a great place to short it. And so you see that there. We're, in hindsight, we're looking at the peak. So if you just go with the 15 points, you get to 15 right in this range, and so you could have shorted in this area, and then the market sold off, and then the reds took off, so then you could have used the red acceleration and down ticks to exit. So got out there on the reds, or you could just have a fixed profit target. It's more discretionary when you take this approach instead of systematic. And then the market rallies again, and the ticks rally again, and so at this peak you're at 16. So say you start out, you wait for it to go to 15, and so you start shorting it in this area, and the market, that was the high. The market didn't trade any higher than that. So if you would have shorted it in this area and held to the end of the day, you would have been profitable just from that point on. So you could have used a profit target, or you could have waited until the reds rallied. They slightly rallied there, but not really enough. If you waited until the reds rallied to here, it would have been a nice trade. You would have gotten in at you would have gotten your signal in here at this time frame, which was about 1904.25, and if you waited for the reds to rally in here, your price was at 1896, 1895 area, so 8 points, and so that was a potential opportunity as well. And then the blues rally again. You're still in the downtrend, and you see it's only at, okay, there's at 15, so you're at 15 right there. The first place it's at 15 is, I'm looking at the number down there, it's 15 right in this area. So you short it right here in this area, 1897.50, and then you get out on the red surge again. The red surge is right here, and you see 1892.25, so about 5 points. And then at this point you're at the end of the day, so you're right 4 minutes before the close. You probably don't want to take any trades then, and so that was that's a way to short the rallies. When the top indicator is telling you that the trend is down, you short the rallies by looking at the blue spikes. And you could do the same if the market was up. Say for example on Monday, you go over here to Monday, and it's not really, it's mainly, you've got a downtrend in the morning, and then it goes into kind of a neutral. The white leads the way, and then it's not really a strong bullish trend throughout the day. The white neutrals is really close by until the very end. But if you did say come into this area and it's still kind of neutral, you see the reds are leading, so you've got a sell-off, and see it could be a good time to buy right in here. It's not really a good signal. You did get a down count of 16, which means it's short-term oversold in either a neutral or uptrending market. You could have potentially looked at buying it there. It's, again, this is more discretionary. In 1921, the market rode up here to as high as 1940. So those are some potential opportunities. And again, today it's Wednesday. The blues lead the way at first. The first 30 minutes, there's no plots the first 30 minutes because it looks at the first 30 bars, and so we need 30 bars before it generates plots on the dynamic. Now the static is plotting, and it's blue, and then it's neutral, and then it's red. The market has to sell off quite a bit before it goes red. And so now that it's red, it's red, it's red, the trend is down, the trend is around. Let's wait for a rally, let's wait for a rally, wait for a rally, and we get one right here. We get a rally. We're at, first time we hit 15 is right there on this bar. And so let's just look at the low of that bar, 1880.25, and you come down here 1871.50. So you have about 8.5 points of potential profit. But then the market rallies again, and you typically want these things to spike and go back down. So if it spikes up here and the market goes down, but the ticks stay up, then you may not want to short it again. You could have shorted it again on this spike up here, but as you can see, the static indicator is slowly transitioning into a bullish trend, and so now the bulls are leading the way. So now at this point of the day, if you're discretionary trading, you're looking for another sell-off and the ticks to create a red spike in this dynamic indicator. So if the ticks trade down, and then you see this red spike down this dynamic indicator, and the static indicator is still blue, then that could be a good potential opportunity to buy and catch a rally. But overall, this market's very bearish today. You basically just have a strong sell-off and then a bounce up, and could anticipate another sell-off in the afternoon. So be careful trying to buy this dip. The dip buyers have been around a long time, and they're eventually going to get burned. I think they got burned pretty bad this morning, and so I think that could accelerate into the afternoon. We'll see. So this is one way to trade the markets, is to use the ticks and this tick count trend indicator. And I have a special offer on this. I'm keeping up. I have my new website out now, so let me know what you think about that. This looks a little bit different and a little bit easier to work with. So working out some of the bugs. If you find any problems, let me know. But the tick count trend indicator, you go to indicators, tick count trend, and you can get to this page and you can read more about it. I haven't updated this page in a long time. I think it goes back to 2012, and you can see the results here. But have this special offer, lifetime license, $4.95, the trading system and the indicator. This has been around. It won't be around much longer with the new website, so you won't have the opportunity to buy both the indicator and the trading system for $4.95. This is closed code, but the indicator and the trading system won't be able to both be purchased for this price in the future. So you want to take advantage of that opportunity now while you can. And if you want this indicator and the trading system, you can get it for $4.95. After this, the indicator alone is going to be $4.95, and the trading system will be more. So I'm going to show you how this works. You see the trading system signals there. The system actually works a little bit better on the NASDAQ. Taking a look at the performance report on the NASDAQ for the past year, 289 trades, nice equity curve. No slippage and commission is taken out, so there's $46 average trade profit at $5 a tick. You can figure there's 9 ticks average profit per trade, 57% profitable. So also, if you want the open code, that's a different price. So you can contact me, and let me know, and I will be able to tell you more about the open code if you want the open code, so you can make your own modifications. So that's the update. Exciting markets, and one way to trade the tick and the tick count trend indicator.